crypto bank. And the question is, which network is the best one? Well, we sort through it and we try Bitcoin, and it kind of works for a while, and then we trust it and more money gets onto it. And for a while we're not sure, and then 2020 some crazy entrepreneur buys $250 million of it for a public company. And that's the first time in 10 years anybody ever bought $250 million on that network, and people are like, oh my God.
Hey guys, welcome to Everyday Finance. Michael Saylor delves deeply into the performance of Bitcoin by emphasizing a key figure that surprises the majority of conventional investors. Over the last 10 years, Bitcoin has produced an average annual rate of return, ARR, of about 30%. He dissects this as the mathematical result of Bitcoin's fixed supply, rising demand, and the global devaluation of fiat currencies rather than as a one-time anomaly or the result of hype. Saylor highlights that Bitcoin is designed to do the exact opposite. It flourishes in inflationary environments, while most assets find it difficult to keep up with inflation. He makes the case that Bitcoin is the most effective means for people, businesses, and even governments to safeguard wealth over time by comparing it to digital property. Saylor also dispels the myths surrounding volatility, stating that holding assets that are certain to lose purchasing power poses a greater risk than Bitcoin's price fluctuations. While Bitcoin is a battery that retains economic value over time, he criticizes the fiat system for leaking energy. Those who held Bitcoin over any 4-year cycle have historically outperformed nearly every other asset class. He says, urging viewers to zoom out and comprehend the long-term trajectory. Saylor thinks the market is still significantly undervaluing Bitcoin even as institutional adoption increases and knowledge of its fundamentals advances. As more money leaves eroding fiat systems and enters the Bitcoin network, he views the current price levels as a springboard for exponential growth, rather than the peak.
So, a short summary, why is Bitcoin better? First of all, if I had 100 rich families and they lived all over the world and they didn't trust a government and they didn't trust a bank and they didn't trust a corporation and they had a lot of money and they wanted to keep their money for 1,000 years. If God came down from heaven above and said, hey, I'll run the God bank, issue 21 million God coin, and I will make sure that no one can steal your God coins. You can buy in however you want, and you can trade telepathically with each other, and I'll do this for free. They'd probably accept that, right? The history of the human race is people looking to heaven to solve their problems in every religion. Okay. In the absence of God coin and God coming down to do this, the next best thing would be an intelligent engineer that creates a crypto network that combines semiconductor technology, public-private key encryption, and the internet, TCP/IP, okay? That's a crypto coin. So now we create a crypto coin, and the question is, who's going to run the software? Because nobody trusts anybody, and maybe I trust you and you trust me, but I don't trust your idiot great-grandson. You don't even had him yet. I mean, how could we trust your great-great-grandchild? Okay, so we're all going to run the software. And we're going to run it on thousands and hundreds of thousands of nodes, and anybody whose software cheats gets kicked off the network. Okay, that's the idea of Bitcoin. It's basically a crypto asset network. Now the question is, okay, I figured that out. Now what kind of monetary policy I want? I want 21 million hard cap forever, never can make any more. I want a scarcity. I don't want nobody can make any more. Okay, that's good. Now the question is, okay, I did that. Now, which network is going to win? So we launched Bitcoin as the 40th try, and the first one with the right monetary policy, the right cryptography, and an equitable launch. Satoshi launches it, walks away forever, disclaims beneficial ownership. It's an immaculate conception. Okay, what if somebody else launched another crypto network with an immaculate conception? You know, there's been 5 million cryptos launched. Most of them are not immaculately conceived. Some of them still have the founding teams that are getting rich off of them. When there's a founding team getting rich off of them with a jet and with an office or with a mansion, it doesn't look immaculate. There's no Satoshi in a swimming pool flying his jet around as a billionaire, right? That's
Maybe
why,
he is, we don't know. We don't know who he, she, they are.
And the point is, we absolutely know there isn't, because the coins have not moved in 15 years and we can see them. So now the question is, you've got all these smart families and they're staring at the crypto gold network, if you will, or gold's not even a good example, just a crypto bank. And the question is, which network is the best one? Well, we sort through it and we try Bitcoin, and it kind of works for a while, and then we trust it and more money gets onto it. And, you know, and for a while we're not sure, and then 2020 some crazy entrepreneur buys $250 million of it for a public company. And that's the first time in, 10 years anybody ever bought $250 million on that network, and people are like, oh my God.
The use of airdrops by cryptocurrency projects to reward early adopters, foster community growth, and create natural buzz has skyrocketed. However, this popularity has come with a dark undertone. A startling increase in sophisticated scams that prey on unwary users. In this video, we expose the use of phony airdrops as extremely successful traps that are designed to remarkably closely resemble actual projects. Cloned websites, phony social media profiles, and urgent messages promising enormous token rewards are frequently used at the start of these scams to induce just enough FOMO to lead victims to make risky choices. In the mistaken belief that they are participating in genuine cryptocurrency opportunities, victims are tricked into connecting their wallets, signing malicious smart contracts, or even disclosing private keys. With millions of cryptocurrency lost to fraud in 2024 and 2025, projects like Wall Street Pepe and Hamster Combat have turned into cautionary tales. These days, scammers use sophisticated phishing techniques, phony token claims, and phony Claim Now buttons to start secret smart contract approvals that quickly empty wallets. These scams are particularly dangerous because they are believable. The language is designed to arouse fear or greed. The websites appear authentic, and the branding is spot on. Users must adopt a new degree of digital skepticism in order to stay safe. This entails confirming announcements only via established official channels, avoiding airdrops that require payment or action up front, and never entering private keys. Airdrops are starting to change as the cryptocurrency industry develops. Many are shifting to safer, activity-based models that incentivize real behavior and engagement, rather than just wallet connections. Users can still benefit from the exciting potential that airdrops offer by being aware of the warning signs and staying informed. This will help them avoid falling for increasingly clever and deceptive traps that are meant to rob them of their cryptocurrency.
A guy like Jack Dorsey, and you ask him about Bitcoin, and say, I didn't do it for the money, I did it to fix the money. The legacy is the English language, electricity, fire, fission, fusion, engineering, right? Telecommunications, right? Mathematics, all of these things are, and what's the legacy here? It's a monetary protocol which is true, right? The history of the human race, if you look at it, it's fraught with people dying from dirty water, dirty air, dirty clothes, dirty environments, dirty everything, right? It's like dirty blood. And, overcoming that with electricity and clean water, right? Just the joke is like a poor person sits down at a table and they put a glass of tap water in front of them, and that's what you drink if you have no money. If you have money, you buy a Coke Zero, or if you have a lot of money, you buy a $1,000 bottle of wine. But the poor person drinks the glass of water, and I just finished reading again The Story of Civilization by Will Durant. It's like whatever, the books are all over there. It's 11 volumes, it's 15,000 pages.
You read all 11 volumes?
From the beginning to the end. And there's 1,000 stories of famous people that died of gout because they didn't drink water. They drank wine because the water had bacteria in it and cholera, and you died of infection if you drank the water. If you were the king of England, you couldn't get clean water. Then the rest of them died because they walked past a swamp, got bit by a mosquito, and they didn't have any cure for malaria. They had no modern medicine, or they died of tuberculosis because there's no penicillin, or there's no antibiotics, or to treat it. And so today, right, it's like, well, what's your legacy? It's like, clean the air, clean the water. What kills the patient? It's dirty food, dirty water, dirty air, right? How did we kill George Washington? We bled him to death. We bled him to death, right? That's why he died. And so what's killing every corporation on earth? It's dirty money, dirty capital to be precise. The asset that every publicly traded company, 50,000 companies use, is sovereign debt. Sovereign debt yields 3% after tax at best, 2%. The cost of capital is 13%. It's a negative real yield of minus 10%. It means that you hold $1 billion, you lose $100 million a year holding the money. It's like forcible chemotherapy for your healthy 14-year-old teenager. Or it's like strapping the 12-year-old kid down and taking 2 pints of their blood every day and sending them off to track practice.
It's a very morbid metaphor, but I'm picking up what you're putting down.
The point is, it's medieval, but at the end of the day, that's the scourge, the burden of humanity that they've been hauling for thousands of years. And so when you ask, what is human progress? What elevated the civilization? It's technology. And a lot of painters, they went blind because a middle-class family can afford one candle. Look around you, right? Each one of those is one middle-class family of light. Clean light, clean water, heat, air conditioning, electricity, energy, clean blood, antibiotics, right? A language you can speak, right? All of these things define modernity. So what is my agenda? My agenda is fix the money, because the 50,000 companies have a life expectancy of 10 years. You know why you die in 10 years when you could live forever? It's because you have toxic chemicals in your vein. Right? I can kill a healthy person if I inject poison into their vein. I can kill a healthy person by sucking the blood out of their body. If the money's broken, all 8 billion people, right, have toxic capital. All 300 million companies have toxic capital. Every institution, every nonprofit, every government, every city, every state, every idea, everything you wish to accomplish, you need in part economic energy. You need energy to accomplish it. What is electricity? It's clean, silent energy.
Bitcoin bulls view the value of approximately $100,000 as a pivotal level for the next major move. After a volatile period, Bitcoin's stability near approximately $16,000 last week is seen as a sign of strength as it retests psychological levels. Analysts like Rect Capital are observing a breakout from a downtrend and increasing momentum towards the tilde 16,600 resistance zone, which could spark a new rally with a strong daily close. Whales manipulate price with surgical precision, triggering sudden wicks to exploit dense liquidity pockets, causing chaos for leveraged traders. Breaking below $100,000 could lead to cascading liquidations and downside acceleration. On the other hand, a short squeeze may occur if Bitcoin reaches approximately $112,000, where unclaimed liquidity is available. Fresh CPI and PPI data before the Fed's interest rate decision make this week's macroeconomic calendar crucial. Despite softening inflation, the Fed's hawkish tone has markets on edge. Any policy shift could boost risk assets like Bitcoin. On-chain metrics show short-term holders cluster near approximately $16,200, their average entry point, indicating profit-taking and short-term volatility. For mid-term holders, those who bought within 3 to 6 months ago, the cost basis is near approximately $97,500, indicating strong support. An unexpected public spat between Elon Musk and Donald Trump has shook crypto markets. While reactions have been mixed, some believe the clash may change market psychology, turning fear into opportunity. Sentiment research shows investor sentiment is nearing a sell the rumor, buy the news reversal. With fragile sentiment, limited liquidity, and upcoming catalysts, Bitcoin is poised for a decisive move that could either break resistance and regain momentum, or lead to deeper corrections if bulls lose the $100,000 threshold.